Okay, so you have some money saved up and you're thinking about ways to invest it. The investment world can be pretty intimidating with all the technical jargon that's floating around. In this video, my goal is to simplify and help you understand stocks and investing much better so then you're able to gain some wealth. Hey there, my name is Abe and welcome to the Financial Corner. If you're new here, take a moment to subscribe to the channel so you won't miss out on new videos on easing your financial burden and increasing your wealth. Before we get into what stocks are and how you can invest, let's get into what happens to your money in the long run. Your money loses its value at an annual rate of around 2 to 2.5% due to inflation. Inflation is the reason milk today is $4 and in 1970 it was $1.32 a gallon. Say you have $10,000 saved up and you stash it away in your closet somewhere for 10 years. That $10,000 is not going to be worth the same amount in 10 years that it is worth today due to inflation of around 2 to 2.5% every year. Yes, I know what you might be thinking right now. Why in the world would I put $10,000 into a closet when I could just put it into a savings account and make some money? But the highest paying savings account will not save you from inflation. If inflation is 2 to 2.5% annually, the highest paying savings account pays around 0.55%. No bank out there would pay more than 1%. They usually pay much less than 1%. There are some that even pay 0.01%. So savings accounts are a no-go. Now that's where investments come in. Instead of stashing your money away into a closet and losing it due to inflation, or putting it into a savings account where you're going to still lose it due to inflation, you can invest your money into stocks, bonds, crypto, real estate, whatever your heart desires. Now let's get into what is a stock. A stock is a share of a company. Once you buy a stock, you are now part owner of that company. There's a few ways you can make money with stocks. Most people think you can only make money with appreciation, where you buy low and you sell high, but there's also something called dividends. These usually are done by more established companies with high cash reserves, such as Apple or AT&T. Dividends are a distribution of the company's profits that go back to the shareholders. This is usually given out every quarter, which is about every 3 months. I'm sure you're still worried, like most people, on losing all your money in the stock market. The only way you can lose your entire investment is if the entire market just collapses or the company that you're invested in goes completely bankrupt. If you invest in sound companies with a great profit to earnings ratio, then you won't have to worry about that. One thing you have to be aware of is that the market is not always green candles and straight rockets to the moon and printing tendies forever. I know you might see that on Reddit or in the memes all over the internet. There's always market pullbacks. What sets apart great investors from weak investors is they do not sell when there's a market pullback. If you have high conviction in a company, don't sell just because it pulled back a little. Do not sell for a loss. Your conviction in that company should not have changed just because the market pulled back. You double down, you buy the dip, and you hold on for dear life. But since you're new to the market, one of the best ways to mitigate risk is to invest in index funds. Index funds will make it much easier for you as a beginner. Instead of looking for the best companies individually, you can invest into an index fund. Having an index fund will help protect you if certain individual stocks do not do as great as others. Index funds have around 10% yearly returns, which is a great way to get your foot in the water as a beginner. Index funds gains might seem like they're not that much compared to some of these Reddit traders who post 500%, 1000% gains in a month, 2 months. But those are not very easy to get. That's 1 in a million. And if you go around trying to chase those astronomical gains, you could blow up your account and lose all your money on the way. But if you do want to be more hands-on and individually pick your stocks instead of investing in an index fund, then I advise you please diversify your portfolio. Do not go and put all your eggs in one basket. Now, How do you even buy shares? These days are the best times to start investing. With technology, they made it much easier to be able to invest from the comfort of your home, on your cell phone, and the trades are free. Back then, brokerages used to charge somewhere from $8 to $30 per trade, whether you buy or sell. This could eat into your profits. I personally use 3 brokerage accounts: Webull, Robinhood, and TD Ameritrade. You can look up all these online brokerages, see which one fits you, which one you like the best, and which one is easy for you to use. Open an account, fund the account, and you can start investing. Some of you still might be thinking when you should start investing. If you're watching this video and you're not invested yet, and I don't know what you're waiting for, go open a brokerage account and start investing. Today is the day. As long as you don't have any high interest debts and around 3 to 6 months of an emergency fund, then you can start investing today. In an article by The Motley Fool, they reference something called the Snowball Effect. The Snowball Effect is when you're rolling snow on the ground, it starts off as a very small snowball. But as you keep rolling it and rolling it and rolling it and rolling it, it's compounding. The more it compounds, the more you roll, the bigger it gets. The more it grows, the heavier it gets. That's the same thing with your investments. The longer you hold them, the more they compound and the larger the investments get. And then more and more and more and more money you can make. So we talked about how inflation eats up your money, what stocks are and how you can make money from stocks, how to invest in the stock market, whether you want to invest in index funds or individual stocks, and how to mitigate risk in the market. Now, if you found this very helpful and you learned something, please like and subscribe and send this out to anyone who still is not invested in the market. Tell them to stop saving their money and losing it to inflation, and teach them something that'll help them increase their wealth. Thank you and have a great day.